Hey guys, we're going to go through and do the demo problems for chapter 13. So you've got good examples to do. Our first one here is demo problem 13-1. It's recording payroll in the general journal. Remember, journalizing it is the same way that you've journalized other transactions. The only thing you've got to identify here is which accounts are being affected. So when we look at these accounts that they listed for us up here, one of the things you're going to see always on these types of problems is gross earnings. When you see gross earnings, you want to think salary. The other thing you're always going to see is you're going to see this net pay down here. Net pay is what the employer is actually going to pay the employees right now. So that means they're going to write a check to them or issue an electric funds transfer to them. So this is always going to affect cash in bank. The other ones in between are always going to affect the payable accounts that are set up to go with each of those things. They're titled just that same name with payable at the end. Remember, these are liability accounts because the employer will later on have to pay that to either the government or the insurance company or the union. They're just right now withholding it from the employee's pay. All right, so when we look at this, we know that an expense account increases on the debit side. So that means that our gross earnings here, that is a salary expense, sorry for my writing, is going to be debited. Everything else here is a liability. So it's going to increase on the credit side. So those will all be credited. Cash in bank is decreasing. The company is paying that money out, and so therefore the decrease of an asset account is always a credit side. So that will be credited as well. If you look at the total of the gross earnings compared to all of these numbers here, those two should equal, and our debits and our credits will equal. So the way we do this is, it says page 18, so we put page 18. We put the date like always, and I believe that it said in the instructions that this was May 16th. So we've got 2018, May 16th. We start with our debited account, which is salary expense. I'm sorry, I don't like that green. I'm changing to blue. And the amount goes in the debit column, $4,955.30. You then will list each of the accounts that come next, but you will indent them. So you federal income tax payable. Then you've got that for $793. Then you've got state income tax, again, payable. And that would be $99.11. You would keep going. Social Security tax, Medicare tax, insurance. These are all payables. Write out the words. Union payable. You would list all of these amounts here in the credits. Your last then is cash in bank. This is what got paid out. And that would be $3,429.61. Like with all other transactions, you still need a source document. The source document for something like this is your payroll registry. For the date. And it said he paid check 345 for payroll. So that would be also what would need to be here, check 345. Okay, for problem 13-2 in our demo packet, we're looking at computing the employer's payroll taxes. And it says that the T-Ling gift shop employees had total weekly gross earnings of $3,946.45. Remember, this is important because the employer's payroll taxes are calculated off of the gross earnings of all of their employees. The Social Security rate is 6.2%. Medicare is 1.45%. The state unemployment tax is 5.4%. And the federal is 0.8. What they did was they let you deduct your 5.4 from the federal 6.2. So you only have to calculate the 0.8% for federal. What they want you to do is in the T accounts below is show whether you're going to debit or credit each of these payroll taxes. And the way you want to do this is you want to look at each tax individually, put it in its proper place in the T account, and then make sure that your debits and your credits match. So let's first look at Social Security. Social Security is a 6.2%. So we multiply our gross earnings of $3,946.45 by 0.062, and we get a total of $244.68. This is an increase of our liability. This is an increase of what we owe, so it goes on the credit side of our Social Security tax payable. Likewise, when we calculate our Medicare tax, we get $57.22, and that's going to be a credit to our Medicare tax payable account. Our federal unemployment tax is going to be $31.57. Again, that's an increase of what we owe. It goes in the credit side. And finally, our state unemployment tax is a credit of $213.11. And I found that by multiplying our gross earnings by the 5.4%. Well, now we have a whole bunch of credits, and we know whatever we credit, we have to debit. So we add each of these up, and that's going to be our total payroll tax expense. It's an increase of our expenses, and so it goes on the debit side. The total of all of these numbers is $546.58. Now we can use this information to come down to our journal, and it asks us to journalize these transactions. And so it asks us to do it on page 26 of our journal. It said that the date was June 23rd. We start with what was debited, which was our payroll tax expense. And that was $546.58. And then we list all of our payable accounts. So you'd have Social Security tax payable for $244.68. You'd have Medicare tax payable You'd have your federal unemployment tax payable, and you'd have your state unemployment tax payable. Put their amounts in on those credits. Final thing you need for any transaction is your source document. Your source document for transactions like this is your payroll register. And you must include the date. There you go. Make sure you fill in your amounts here. Okay, so problem 13-4 looks at paying these liabilities for your taxes and your withholdings. When you go to pay these liabilities, it's the same way as if you had made a payment on any other liability account. In order to pay it, you're going to end up debiting that account, which lowers what you owe, lowers your liability. But if you debit it, you've got to credit something else. Well, we're paying something. That means we're writing a check. That always affects our cash in bank. So therefore, for each of these, you're going to debit the amount that it shows there on page 16, but you're going to credit credit cash in bank, the same amount. And it tells us here on the bottom of page 16 which check we used to pay which of these payable accounts. So when we go over to page 17 and look to journalize each of these transactions, it told us to use page 18 of our journal. It told us that this was for the October 6th payroll. So we've got our date. And it told us that we paid the federal income tax, the Social Security tax, and the Medicare tax all with one check. So that means we're going to list all of those debits together. So we're going to write employee, federal income tax, payable, because we debited that one. We're going to write Social Security tax payable. And we're going to write Medicare tax payable. And we do this because we paid all of these with just one check. You want to list each of their amounts in the debit column. So $1,459.47, $375.74, and $82.50. Well, remember, whatever we debit, we have to credit something. And because we're paying these, we credit cash in bank. For the total of what we wrote all three of these onto one check, if you add up these three numbers, you're going to get $1,917.71. Our source document for this is check 534, and that's what they told us on page 16, was we wrote check 534. I'm going to do one more for you, and then I'll expect you to do the last two on your own. Let's look at the employee state tax. This was also paid on October 6th. This was the employees' state income tax payable account that we debited because we're decreasing it. So we debited $239.34. So if we debited that, we have to write a check for it, so it affects cash in bank for the same amount, $239.34, and our source document is check 535. Again, they told us the check number on the last page. So you go ahead and finish out the last two, federal unemployment tax payable and state unemployment tax payable. And I'm going to move on to the last page. Okay, this page is going to be almost identical to the last page where we have to pay out these voluntary deductions, these payable accounts that we've had for them. So you see those listed up here, your health and or hospital insurance premiums payable, your life insurance, credit union, U.S. savings bond. These are all voluntary deductions that the employee signed up for, but now we've got to take that money and put it to the companies that they're owed to. So we do this the same way we did our tax burden, right? We owe this money, so we've got to reduce what we owe. That's a deduction, a lowering of the payable account, which means that is the debit of the liabilities. We're lowering our cash in bank because we're writing a check, so therefore that's a credit. So we always list our debits first. So I'll do the first one for you. It asked us to do this on page 46 of our journal. It told us that the date was March 16th. And our first account is our hospital premium payable. And we owe $283. Well, then we're going to credit cash in bank for the same $283. And it told us that we used checks 856 through 859. So this source document is going to be check 856. And that's how you do one of these entries. You've got 3 more entries to do. I expect you to do it the same way. The payable account gets debited, cash in bank gets credited, and your source document is your check number. All right? I hope you guys have a great day today and a wonderful weekend ahead. The sub has your homework packets. You can get that from the sub if they haven't already passed that out to you. Bye, guys.